Hi, my name is Mauricio Martinez, and thank you so much for taking the time to watch this video. I'm a partner here at Hawkins & Martinez. We're a small business tax accounting consulting firm located in Longmont, Colorado, and serving small businesses throughout the United States as well as here in Longmont, Colorado. So let's talk about the child tax credit of 2018. Well, there's good news and there's a little caveat. So let's start with the good news. The good news is the child tax credit went from $1,000 to $2,000 per qualifying child. That's a good one. All right. On with the extra good news. Well, for some of you, you have not been able to actually take advantage of the child tax credit in the past because let's say you had, if you had adjusted gross income of $110,000, more than $110,000, and you were filing jointly, you weren't getting any benefit or you were getting very little benefit. In other words, once you got to $160,000 of adjusted gross income with you and your spouse together, you weren't getting a child tax credit. Here's a nice thing. The new law actually raised the phase out from $110,000 to $400,000. So again, if you're making about $160,000 of adjusted gross income together with your spouse and you're filing jointly, in the past, no advantage. Now you get the full tax credit. So there's a really nice one there. For those of you who are not filing, married filing joint, anything else, it would be $75,000 is what it used to be, the phase out, and now the phase out is $200,000. So again, that's still very, very positive. Now, here's the little caveat. You need to be careful because there's really more to that equation than just the extra $1,000 per child credit. So don't think that, you've got 5 kids, you got another $5,000 in credits coming back. Well, not necessarily, because see, there's some changes to the tax law that kind of went the other way. So here's one of them. The exemptions. The personal exemptions went from $4,050 per person. Now this is not a tax credit. This actually lowers your taxable income. So it's not as powerful as a tax credit. But if you're at the 25%, or if you were at the 25% tax bracket, $4,000 is pretty much equal to a $1,000 credit. In any case, the exemptions went from $4,050 to $0. Okay, so also though, the tax rates went down. See, so you've got a lot of things going up and down. You've got the tax credit. Boom, that's great. That lowers your tax liability. But then you lost that exemption. But then the standard deduction doubled. Again, your taxes went down again, and again the tax rates went down. Again, they went down. So there's a lot more to the calculation, but quite honestly, after looking at a lot of the clients that we have, whether in small business or individuals, for most of you, we're looking at a net positive. That's good. But here's my suggestion. What you need to do right now, and before you start spending that money that you think is coming, get your 2017 tax return done. Get your tax preparer to take a look at that 2017 return, get it done. With those 2017 numbers, then you can actually project forward, or you can have your tax professional project forward and see how you're going to do in 2018. That way you'll make sure that your deductions, your exemptions, whatever it is that whatever we're using now in the W-4s to keep track of how you're going to take taxes out of your paycheck, that's actually set properly, because you don't want surprises. All of a sudden you think you got this awesome tax credit coming in 2018, then you go to do your 2018 return and it's not exactly what you expected. Okay, so if you'd like us to do your tax return, give us a call or come to our website, hawkinsmartinez.com, or give us a call at 303-772-1577. You can always click on the link that's probably right below this video, and it'll take you to our contact page. You can put in your information there and we'll give you a call. All right, thanks so much for taking the time to watch this video. Have an awesome day. Take care. Bye-bye.